Hello, greetings, and welcome to Dividend Blasters. This is our 74th video. Topic today: weekly dividends, strategic dividend investing strategy. It's been about a month or so since I've done a video. I've been very busy, and then also I've been exploring some new things. And I feel that if I have something interesting and compelling I want to share, I'm going to do a video. So that's I'm not pumping out a video daily or weekly just for the sake of doing that. There's going to be a compelling need, and that's really what drives me to do this. And I want to thank you, loyal listeners who tune in, listen to the videos, comment, provide feedback. I appreciate that very much. Um, so, what is this about? The strategic dividend investing. Well, in the other videos, I've talked about what are good stocks to invest in, what are good ETFs to invest in, and especially if you're a dividend investor, do you want dividend growth or do you want recurring cash flow? You can want different things. You can invest in different things. This is a little bit different. There's no ETFs in this. This is all stocks, which is really how I started my investing um, discipline and love of a hobby is investing in stocks. This kind of turns it on its head a little bit. It's a little bit different. The purpose here is to invest in various dividend stocks and time the dividend payments so that you can get really um, a dividend payment on a weekly basis. That's what I'm looking to do here. And I actually have a lot of that already. So I'm sharing that, but I'm fine tuning my approach. Um, Part of that is also making sure that I have good diversification across all the different market sectors. You can get that from ETFs, and I have that. Um, but what's different here is that um, I like to also have uh, ownership stakes in companies. I enjoy that. I enjoy driving around town and seeing a UPS truck and knowing, hey, I got 100 shares of UPS, or I got 200 shares of Home Depot or FedEx. I really like that. So that's one thing. And then another thing I've started to do is get into options trading. And why am I doing this? I'm doing this to complement my cash flow. So, as you know, I love some of the ETFs out there that have really nice yields that are growing and are maintaining their NAV with minimal erosion, hopefully none, and have that growing cash flow. I love that. But what I have been experimenting and doing more of is selling covered calls on stocks. You can do that on ETFs, but when you do it on stocks, you will tend to get a better yield. Um, a lot of the ETFs, especially the cover call ETFs, they're doing that for you on your behalf. Uh, so if you try selling covered calls on those or on other ETFs, you're going to get really less of a return. There's less risk, of course, but if you own the stocks, if you own 100 shares of stock A or a couple hundred shares of stock B, you can sell covered call options. And that's another video. But you know what? If you do it right, like you set the strike price out of the money sufficiently, and that may not mean anything, and we'll cover that in a different video. You will get a nice premium and you can do well. So I've been doing that and I've been learning more and experimenting, and it's been helpful. And some of my friends and colleagues out here do that a lot. And we love to talk about different strategies. So I'm just sharing a little bit of that with you. I'm not going to go too deep into that. Purpose here is to talk about what stocks, if you want to do that, or if you want to just buy more stocks and time dividend payments on a weekly basis, what are some of the ones you might invest in? So I am going to share that with you. Just a disclaimer, I'm not your advisor. Purpose of this video is for information and education. It reflects my own personal opinions and my personal experience as an individual investor for more than 30 years. So if you make any major financial investment decisions, I would advise you to go ahead and get the advice of a financial professional. All right. So, what you're going to see over the next three slides are selections of dividend stocks that I like and that I own, and that pay, you know, eh, across the three different cycles. So, first cycle was January, April, July, and October. Second was February, May, August, November. The third cycle is March, June, October, or I'm sorry, September and December. So that's really what this is. And I'm breaking it out by week. So a lot of these stocks are very consistent on how they pay and when they pay. They realize that dividend investors come to expect consistency. Now, what you will see here is there are some stocks that don't necessarily pay the first week of every quarter. They may be straddling the first week and the second week, or the second week and the third week. They may mix it up a little bit. I am just placing these here for convenience. Um, so, for instance, Pepsi, I have that here as first week of the January, April, July, and October. Go back and check this. May deviate a little bit. But I like Pepsi. I like the yield of 3.6%. Dollarized, that's $5.42. DGR is the 5-year dividend growth rate average, and that's 7%. That is a decent average annual growth rate over the past 5 years. Sector, don't want to skip over the streak. They're a dividend king. They have increased their dividend for 52 consecutive years. Outstanding. And as far as where they reside across the market sectors, consumer staples. That's right, soda. They're in the consumer staples sector. I'm not going to read all these. I'm just going to basically cover them. But you can see where the data elements are that I'm covering. It's the price, the yield, the dividend rate, the 5-year dividend growth rate, the number of years they continuously and consecutively increased their dividend, and the sector. ADP, it's another good one. 26 years they're in the industrial sector. The HR software, payroll software company, wonderful company. I like Federal Express. They got a 4-year growth rate. Their dividend growth rate is 15.74%, which is really outstanding. A Genuine Parts Company, Dividend King, 68 years. JP Morgan Chase, the biggest bank in the United States, part of the financial sector. I like that dividend growth rate of 7.14%. Pfizer, the pharmaceutical company, 14 years consecutive growth, a solid growth rate of 4.09%. Their yield's a little higher. They have been getting beat up a little bit price wise for the last couple of years since COVID, but it's a really decent dividend stock. Best Buy, I like Best Buy, and I am a customer of Best Buy. Got a 14-year streak growing. Illinois Tool Works, 29 years. I love that. Um, One thing I'll mention here, I just covered the first 2 weeks of this first cycle. Week 3, these are monthly recurring. So you're going to see these show up again in the next 2 slides. But these are basically, the first one is ticker symbol O, Realty Income. They got a 30-year streak going, and they are in the real estate sector. And then we have a business development company, Main Street Financials. They're lenders. They invest in companies that don't necessarily get lines of credit from big banks. They have a less of a growth streak, 4 years. The yield is higher than the growth rate, but you're going to get that recurring dividend. Let me say one thing about Main Street. The yield is actually higher than what you see here, 6.78%. They offer a lot of special dividends. So you may get a special dividend every 3 months. In addition to the monthly dividend. You may get one more than every 3 months. You may get many, many, many. They're very good with that. So I wanted to mention that. You don't see it here on the slide, but it's worth mentioning. Main Street Capital. Fourth week, Oracle. I do love Oracle. I have several shares of Oracle. The yield is very mild, less than 1%, but I like that 5-year dividend growth rate, it's almost 11%. They got a 10-year growth streak going, and I am glad to own that stock. Let's go to the next one. So now we're February, May, August, November. And you know what? The way to look at these is you don't need to buy every single one of these. But if you want to have a dividend payment coming every week, choose one from each week of each of the 3 cycles. Try that. Get your feet wet. And ideally, if you want to sell options against one of these or all these, you want to strive to get 100 shares of one of these holdings. And then you can start selling covered calls if that's what you're interested in. And that's something that I've been doing and I enjoy. And a lot of my colleagues and friends do that as well. And that's something you can consider doing. In addition to buying your dividend stocks or your dividend ETFs, as well as just growth stocks for price appreciation. But let's just step back. Why do we do this? Why do we as investors buy dividend investments, or why do we sell call options? It's really a risk mitigation strategy. We do that to um, get some return, so we're not totally dependent on price appreciation. And that's really why we do that. We want to get some of that cash. You can sock it away for a rainy day, or you can redeploy it into your portfolio, into that particular investment, or across other investments. So here we are in the second cycle. I like Verizon. They got a 20-year growth streak going. Their yield is higher than their growth rate, and that's fine. That's just kind of the nature of that stock. They do tend to get beat up a little bit price wise, but they are there. And you know what? They got great market penetration. As far as telecom goes, they're outstanding. I really, really like Walmart. They are a king, 51 years going. They have a modest yield and not a bad growth rate, 3.27%. Consumer staples. I have an asterisk here because they have kind of a funky dividend payment schedule, and there are others. I didn't put an asterisk next to all of them, but some of these have a little bit of a funky schedule. So this one, it was paid out in the first week of April, last week of May, first week of September, first week of January. I wanted to group it here the first week and just asterisk it so you can see that. There are others here. You probably want to do a little bit of deeper digging. So if you're really interested in timing your dividends, so you're getting that weekly payment, make sure you do your due diligence. I can do the research for you, but I don't want to spend a whole video on that. You can do that, and I'm happy to answer questions offline or send me a comment. That's the first week. Second week, Blackstone, the asset management firm, they got a 1-year growth streak, so they're really just kind of getting into this. But I like their dividend growth rate over 12%. Blackstone is a big asset management firm on Wall Street. And if you follow that stuff, you've heard of them. Procter and Gamble, who hasn't heard of them? They're a king, 68 years going in the consumer staples sector. They have healthy dividend increases, averaging 6.18%. Dividend yield's not bad, 2.43%. I got to tell you, um, being not a young guy, I'm not really old, but finding a company that has a dividend growth streak older than me, that just does my heart golden. I love it. And I own many shares of Procter and Gamble. I like Costco. You'll notice that they've got 20 years going. Their yield is low, but one thing that is wonderful is that they will offer a special dividend, and it seems like every year, the last several years, I've gotten a special dividend out of them. So that 0.47% does not tell the whole story. It's a pricey stock. It's almost $1,000 a share. But there are people who love it. They swear by it. And you know what I love about their business model? They make money off their customers before you even go in there. They make it off their memberships. So that's a good one. John Deere, the tractor company, uh, love that company. They've only got 4 years in as far as a growth streak, but look at that dividend growth rate of 14.68%. The yield is modest, but they can keep this thing going. They're a good company. Week three, AbbVie, the drug company. You've probably heard of Humira. They basically had a patent on that, and they had patent protection for years, and they had protection. Well, now all the other drug companies are following suit because the patent protection period is over. And but you know what? They got a whole host of other drugs. This is a really good company. I got several shares. They got an 11-year growth streak, um, and their growth rate is almost 7.5%. AbbVie's good. I got several shares of that in my retirement account. I already talked about Realty Income and Main Street Capital. I won't talk about them again. You'll also see them on the next slide. I like Caterpillar, and it's the construction machinery company. That's a good one. They've been going for 31 consecutive years. Uh, Wonderful dividend growth rate of almost 7%. They're solid. This is going to pay out typically in the third week. Fourth week, I tell you, I love Starbucks. They've been in the news. They've had some issues with possible striking and unions. They're there. They're there for the long term. They're not going anywhere. They've had a streak for 14 years. Um, Decent yield, 2.27%. Dividend growth rate of more than 9%. I love that. I have Capital One Financial here. Um, and I own them. They're local to me, and I'm actually a customer. They don't have a streak going yet, but I tell you, I just like them. I think they are a good, solid bank. They're not as big as Bank of America or J.P. Morgan Chase, but they are prominent um, on the East Coast. So I like the dividend growth rate of almost 9%. So that's one to take a look at. All right. And then March, June, September, December. This one's a little bit more crowded because most stocks are in this cycle. Meta, they are a new dividend payer. First week, they have a very modest yield. But I tell you that if you want to get into artificial intelligence, that's a company to be part of. I like that. UPS, I have several shares of UPS. They have been going for 15 years. They're a good buy. Their price is way down. They've been getting beaten price wise. Last year and a half, they had some union issues, but they are a good company. They got good cash flow. ConocoPhillips, I love this energy company. This is a company that offers a lot of special dividends. So instead of getting four quarterly dividends, you're going to get four quarterly and usually four special dividends. And it's not completely reflected in the yield because those are variable. The yield reflects really a fixed dividend yield. They got a 8-year streak going. ConocoPhillips, it's a cash flow machine, and of course Visa. Um, you know what? Uh, I invest in what I use, and Visa's everywhere, and it's a great financials company. It's a great payment technology company. They have the largest payment technology platform in the world. They've been going for 16 consecutive years. I like that dividend growth rate of more than 15%. And whenever I get a chance, and I even see a little bit of a price dip, I buy more. Uh, IBM, 25 years. They're not going anywhere. A lot of people kind of think of them, well, that's old technology. They're still there, and they have a great infrastructure, and they can play a role in artificial intelligence. Keep your eye on them. Another energy company, Chevron. This is by far the company I have the most shares in from the energy sector. 37 consecutive years. I like that growth rate of 6.49% and a healthy yield of more than 4%. It's really wonderful. I like Home Depot. I'm a customer. They've been going for 15 years. Dividend growth rate of more than 10%. Uh, can't complain about them. Target, we got a lot of targets around here. I don't go in there very often. Once in a while, I do go in there. But you cannot deny that they're a dividend king, 56 years, and they're keeping that dividend going of 11.3%. You know what I love? I love Microsoft. And I love them because they are a leading technology company, but they're also very close to becoming a dividend aristocrat. They've been going for 20 consecutive years. Look at that dividend growth rate of more than 10%. Beautiful. Thing of beauty. Week three, Coca Cola. Well, they're a king. Here's another one that's older than me, 62 consecutive years. Their yield is decent, it's 3%. Their dividend growth rate, it's almost 4%. They're just doing it, you know? And people are buying Coke. They're going to keep buying Coke and all the other ancillary products that they have around Coca Cola. Duke Energy, that is really one of the leading utility companies in the United States. Um, I wanted to put Next Era Energy in here as well, but I didn't want to load this up with utilities, but that's a good one. And they've been going for 14 consecutive years. A decent yield. Growth rate's a little bit on the more modest side. Johnson and Johnson, um, 62 years. I mean, who hasn't heard of them? They are a king. And then, of course, we have Realty Income and Main Street Capital in week three. Let's go to week four. ExxonMobil. This is the largest energy company in the United States and really one of the larger ones in the world. They're actually bigger than Chevron. They are a good one. I like them. I would say their dividend performance is a little bit behind Chevron. It's good. They've been going for 26 years. The yield is it's a little bit less, but it's decent. It's almost 4%. So that's another one to look at if you want something in that fourth week. If you want something in the industrial sector, we've already talked about, ADP and some of the others like the Caterpillars and John Deere, Lockheed Martin, preeminent defense contractor. Um, it's a little bit on the pricey side, a little under $500, but the yield is healthy. It's a little under 3%. I like that dividend growth rate of 7.21%. They've been going for 22 years. They're very close to becoming aristocrat. Um, Bank of America. Uh, I talked about, I would say JP Morgan Chase is probably my favorite bank. This is probably the second one, and then I have Capital One. I like this. This is very affordable. The yield is not bad. It's 2.25%. I really like that growth rate of a little under 9%. They've been going for 11 consecutive years. So Bank of America is a nice one. One thing I didn't cover in week three because I kind of ran out of room, but you can see that it's purple, is McDonald's. We've all known McDonald's. We eat at McDonald's. Maybe some of us eat there a little too much. No comment, but I do like that they've got a streak of 23 years and going strong. A wonderful dividend growth rate of 7.47%. The yield's a little bit on the lower side, but it's below 3%, but it's a healthy almost 2.5%. I like McDonald's. I kind of think of McDonald's and Starbucks together because I like those two consumer discretionary consumer staples type stocks to have in my portfolio. So these are ones that you might want to consider. And as I said, you don't have to get all of them, but maybe be strategic in the ones you choose if you're striving to get something on a weekly basis. This can help get you there. And folks, that is it. And one thing I just wanted to mention, um, I am a customer, but I'm also an affiliate of Seeking Alpha, and it's just something I wanted to mention to you all. If you're interested in doing deeper dives into your investments and doing research on stocks and ETFs, this is to me really one of the best sources out there. I can get you a discount. You can get a 7-day free trial if you use the link here, and I'm going to put it in the posting so you can just select it and go to the link, and you'll get a 7-day free trial, and you also get 30 days off or $30 off your premium subscription. So instead of normally the $2.99 per year, you'll get it for $2.69, and you have access to all sorts of research at your fingertips. And there's several 100,000 members and several thousands and thousands of contributors the right, really interesting, compelling analysis of different stocks and ETFs. It's just a wonderful resource. So, if you're interested, check it out. You can leverage my link if you're interested and get that discount. And that, folks, is it. I want to thank you for sticking with me for this video. I hope you found it informative and a little bit entertaining. I'd greatly appreciate if you give us a like, share the video with a friend, hit that notification bell. So next time a video comes out, you'll know that it's there. And would love for you to subscribe to our channel. But until the next video, have a wonderful day and God bless.